Okay, it's 4:15 Eastern, 3:15 Central Time, and we're going to get started with today's webinar, which is titled Finding Profitable Day and Swing Trading Opportunities. There is a Q&A box for anyone that's never been to one of these webinars before. They should have a little chat box on your screen, and you could actually type in questions as the webinar goes on, and I will answer the Q&A at the end of my little spiel. Usually it should last about 30 minutes, I'd say, and then I'll leave the last 15 minutes for Q&A, so then we can have 45 minutes total. I do tend to run a little long, so hopefully I'll get it done quick. Could someone just give me a sound check quick? Anybody just hit that you can hear me okay? Before I start going into something, just type a yes into the... There I go. All right, good. Thank you very much. That's fine. Okay, so my name is Scott Smith. I'm a senior technical analyst here at briefing.com for the last going on 10 years now. I've been trading stocks since the mid to late 90s during the whole NASDAQ bubble, etc. And I must be doing something right since I'm still managed to survive, in this environment. A couple bear markets in both cycles. So what I'm going to do with today is I'm going to share with you a page that I created for briefing almost 10 years ago, and the page is called the TA page TA scans, and essentially these are patterns that I just found repeated themselves over and over and over again, and they've actually been really profitable from both a day trading and a swing trading perspective for me. On the Briefing Trader service, I post setups and trading opportunities under the ticker Blue Chip Trader, or BLUEX. And this is my focus list. I go through these stocks almost every single day, and I try to find and point out some of the best technical setups and patterns that I see out there for subscribers. And I'm just going to walk you through a couple of examples, and hopefully you get a good feel for this and start using it and incorporating it into your daily analysis. It's excellent for coming up with focus lists, as well as giving you just a general sense of the overall market breadth and where the action is. For those of you that don't know, the TA page scans can be found under the Investing and Trading drop-down under Technical Analysis, and it's the TA page scans. This is the scans that we had for today. And I'm just going to start from the bottom up, and usually I go from the top down, but I'm going to start down at the bottom because these are the ones I can fly through quickest. So the first one that we have down here is the Blue Chip Etf Signals, and this is a proprietary trend / momentum signal on the spiders, SPY, that I created about, let's say, about 2 years ago, a year and a half ago. I was trying to find a way that I can actually just keep myself on the right side of the intermediate trend. I wanted to be focused more on longs and stick with those longs for swing trades when the market was going higher. And then when the market kind of started going sideways and started going into more of a bear cycle, I wanted to make sure that I had this, say, like sell signal here in red as of June 20th, which was C, to tell me to ease off the accelerator. Don't be focused so much on the buy side, on buying dips, and try to, sell more into rallies and be aware of the breakdowns that are happening. I'm not going to give you the exact formula for it, but I will tell you that it's a combination of the daily and weekly highs and lows tied in with some moving averages, MACDs, and stochastics. And it's been doing pretty well. Anybody that's actually been following this, you see the signals, they don't go through too many whipsaws, and they do tend to keep you in a trend for a couple of weeks, which is really helpful. The next one that you're going to see is bang for your buck. And this came out of almost a necessity of this year on the trader subscribers. People kept asking, how do we find all these stocks? Like, how do we find the momentum names? How do we find the ones that are moving? And so basically we just came up with a simple scan for it. And these names are basically going to be the fastest moving names with enough volume in them. And it's updated weekly. but you can see if you've been trading for a little while, you can see that there's names like Tesla in there, and WLT, and First Solar. Triple D is the printer. UNXL was a big mover for a while. You just get Solar City's been actually popping lately as well. It's just these are the names where if you are scalping, you're gonna be guaranteed to capture at least $1 in these names on a daily basis, and there should be enough liquidity in most of them that you can go in and out easily without fear of slippage. And that's really all that's for. Again, if I don't recommend trading these if you're new to trading. These are high-octane names. They will move fast. You have to definitely be experienced and know what you're doing to trade these. The next 3 scans are your basic 200-day, 50-day, and 20-day alerts. And this just came about too from a subscribers' needs. People were just curious, so like, how do I find stocks that are just trading around particular moving averages? And so we came up with a scan that just said, hey, these are stocks that are within the vicinity. Here's a heads up on these. If you're interested in these type of setups. Also, I should point out too that the scans themselves, there is a minimum requirement. I usually try to focus on stocks that are trading above $10, as well as 1 million shares on average. And we also incorporate the average true range. So we want average true range to be greater than $1 in most of these cases. We want stocks that are basically liquid, trading over 1 million shares, and have some volatility on them. We want them to move. So that's going to be an average true range, meaning that they trade on a daily basis, high and low, a minimum of $1. In some cases I'll actually have to raise those filters to be a little higher to say an ATR of $1.50 or even $2 on some scans in cases of the volatility increasing significantly. You're going to see this a lot on like wide range breakouts or wide range breakdowns. Last Thursday, I think it was, when we broke down in the market, I mean, the wide range breakdowns, they exceeded like 175 results. So right off the bat, I'm forced to filter for those that are showing the highest volume. Now, just to take a quick break, I'm going to jump back to the PowerPoint. So again, these TA scans they're just a great reference. If you don't have a game plan at all and you need to establish a focus list each night or each morning, this is just a great area to start. The patterns are repeatable. You should be able to look through most of these scan results and see clearly on the chart a pullback. See clearly that it's been running up for 3, 4, 5 days in a row. See clearly that it's in this little narrow trading inside bar doji pattern. See that it's breaking out. I mean, there shouldn't be any sort of questionable when you look at it, you shouldn't have any sort of question and say, what is he looking at? What does this scan mean? Occasionally that does happen. I'm not going to, I mean, again, the scans aren't perfect. They're not mechanical systems that you just step in this morning and say, oh, there's a pullback long, I'm going to buy it. You have to actually look at the chart and make sure you identify a clean entry, make sure you understand where your risk is before you go in and trade any of these things. It's just a great way to actually come up with a watch list, so to speak. Of course, the key to success on almost everything is always to get the bigger picture, be on the right side of the bigger picture that's going on in the market, in the indices, and as well as sectors, and then you start looking for certain things. So this is kind of where that whole trend momentum signal comes from. When that was on a buy signal, I really wasn't interested so much as taking any of the pullback short candidates. It just wasn't a priority for me. The overbought names. Sure, they were more at one point during the May run-up. They were actually excellent squeeze opportunities. You got to also realize too that a lot of these patterns, even though they have a bias initially, the failure of some of these patterns is actually going to be much stronger a move than the actual setup itself, depending on the overall market environment. So again, the opportunities here and the setups here are really good, but you definitely have to take into context of where the market is as a whole. Also, when I glance through, I have a slight advantage because I do have to input all these stock symbols into that spreadsheet every night. So I'm always looking at the names and they're triggering a bell. But what I'm always looking for for the trader service under BLUEX, I'm always looking for names that jump out from the liquid momentum focus list, the emerging growth focus list, and the value focus list. These have fundamental components to them, and that's how we come up with those focus lists. And anything that shows up on the TA page scans that I've recognized from these focus lists, it's going to get a priority for me to start watching that coming that next morning, whether it be a long or a short. I just want to know. I just know I want to be in on it. And like I said, I post most of these my trading comments under BLUEX, and I'm pretty much drawing most of my ideas from this throughout the day. All right, now let's move into some examples of those other ones that I skipped. So we're going to go right to pullback long candidates. So like I stated earlier, you always want to take the market into a broader context of what's going on first. Let's just delete some things here. If I go back to April 18th, the market was started to break down to a corrective pattern off its high, and you can see that this was the 50-day moving averages, which is these green line, the blue line there. There's also a key support coming into play from mid-March to the early April low. So you had a support level here. So the first thing I tell myself when I come in the morning, all right, I say to myself, okay, the market's down approximately 3%, down 4 days. It's aggressive selling, but we're coming into a major support level. I'm probably not, well, I can tell you right now, I'm not going to be looking for an opportunity to start shorting or getting in short any breakdowns. At this point, I'm pretty much going to be looking for any oversold candidate as well as a pullback long that's been holding up within its uptrend as a buying opportunity. And this was April 18th. Let's see, for April 19th, I'm sorry. And if I go back, I could probably find, I had examples listed here. Oversold. Let's start with oversold. Let's see, I think Apple was a good example. Yeah, so Apple was one of the culprits that day on April 18th. So the whole market's breaking down. The stock was weak. It took out the 400 level, I believe, for the first time. And I'm pretty sure that myself, as well as Chart, were picking the stock up under 390 the next day, watching the S&P bounce off the 50-day moving average. This was actually a really nice winner for both of us as it traded back over $400. Other ones that we were looking at, I believe, was ESV was a natural gas energy play. You can see that it got hit multiple days in a row, and I had a long-term support coming into play based upon this gap back here in August of 2012, and I believe I had it on the radar as a bounce, and I believe also Level, the other trader that does Level Watch, he also posted a long in this around $51, $52 on the reversal, and you can see that it just made a nice turn. Hopefully you're just kind of seeing those. Obviously, this day had some extremes. I was also scaling into long at FCX. This is one of my favorite gold stocks. It's a split with copper. Has a nice dividend over 4%. It just got absolutely hammered here for about a 17% loss, and it was coming down into this lower channel trend line. And I was picking it up as a swing trade around $28, $27. And it turned out to be a really nice swing into mid-May for a sizable gain of about 4 or 5 points. So hopefully you get the feel there that what those were some of the oversold candidates I was looking at the time. I believe, yeah, this is WDC. This was on the top of our liquid momentum focus list and BLUEX list, and you can see it had this breakout here. The S&P was correcting to the 50-day moving average, and this showed up on the TA page scans as a pullback long candidate as well as a 50-day moving average alert. And on the 19th, you could have just kind of scooped right in there and had a nice run from about $50, $49, and just made a nice recovery breakout for multiple points into the end of April. Another one that was on the list during that time, I believe, was Whole Foods, mid-April. And this one was a little questionable. This is a good example of sometimes the scans, you're going to look at it and go, why is that showing up? And And again, these are just computer-generated scans, so you kind of have to just pay attention to the action itself. So we did have a big, strong lift in the market here, and as it corrected, this showed up as a pullback long candidate within close proximity of its 50-day and 20-day moving averages. 50-day moving averages were about 43, 44. 20-day moving averages are 43. This had been on and off our liquid momentum focus list, so it was one of those stocks I was watching. And you can see that it did make a nice little turn here. I believe it also showed up as an inside day scan as well on the 18th. And then it kind of just made this nice little bounce here. So it goes to show you don't always have to be following these names that are in strict uptrends. If we move along to some other examples of, say, pullback longs, I had May 1st. May 1st, the market made a nice rally, and we had a nice correction. Right? Well, not May 1st. Yeah, it was May 1st. I'm sorry. Market pulled back that first day, and in this instance here, most people would be inclined to start shorting the market, but we were pretty much trading at multi-year highs against this April resistance level. It was the first day of a pretty big. That's a pretty sizable pullback in the S&P. It looked like it was about 1% almost. And I was going to be starting to look for some sort of buying opportunities on weakness. And if the market started to slide down into this area, back into the 20-period moving average around 1575, 1580, pullback longs look like a good candidate there. So some of the pullback longs going into May included Boeing, which looked really just absolutely fantastic. This was also a Doji candidate at the time. You're gonna have to take my word for these. I went back and looked at all these what existed these days, and some of the trades I took as blue chip. So just trust me on this one. You can go back and look at it yourself if you don't believe me in the archives. But this was a nice gap hold right here. Doji setup, a pullback long candidate leading into May. And with the market itself acting really strong, and I was already bullish, this was worth a shot around the $90 area for a nice trend higher. Another name that was on the list was Ashland on May 1st, and this was a strong energy name that gapped up on earnings mid-April, managed to hold on to most of these gains here in a consolidation pattern, but showed up on the pullback long scans going into May, and then just started rallying higher for a nice little breakout. Trip was another one, I believe, on May 1st. May 1st, yep, you can see it just 3 days down, nice little pullback, coming off a pattern around the 20-period moving average, and just took off there from about 52 to 55. And one thing I want to just mention on these, you said you always want to wait for confirmation, especially on the pullback patterns. Pullbacks definitely tend to They don't have to necessarily go the next day. They could be on the radar for about 2-3 days, especially because sometimes they just make an inside day. But the confirmation is usually going to come when it takes out the prior day's high or significant high resistance level or trend line break of sorts. On the pullback shorts, also on May 1st. So again, the market here, we're looking at a market that pulled back here. So say you were bearish on this day, after May 1st, say you were bearish, you start looking at some of the pullback short candidates. Cognizant, CTSH, showed up as a pullback short candidate for May 1st. And you had this massive sell-off here in the latter half of April. And you had this three-day rally setting up like a bear flag pattern, which is basically what these pullbacks are. They're bullish and bearish flag patterns or pennant patterns developing. And this could look like a pretty decent short after this inside day here. You got triggered on the short entry if you took it below this prior day's low, but then it closed fairly strong, and with the rest of the market. So that's your first signal. Like I said, these failed signals, they're actually sometimes better trading opportunities than the actual setups themselves, particularly when they're going against the market. And you can see that Cognizant actually gapped higher the next day, and just started to proceed higher a little bit further over the course of the next few days. This brings me to the next setup that I wanted to focus on, which was inside days and inside weeks. This is pretty much self-explanatory. It's a range within a prior day's range, or the week's range within its prior weekly range, highs and lows. And these are really, really good setups that I found to be very profitable, particularly when they fail. For example, here's an inside day on Cognizant, and it was also a pullback short candidate. So it should have gone down, with the rest of the market on an additional pullback day. But remember, on May 2nd, the market actually rallied higher and proceeded to go higher to above the 1600 level. So this stock basically failed as an inside day pattern and failed as a pullback short pattern, which is excellent for getting long. So it's something to keep in mind. As I'll show you another pattern too. I took a recent short on the trader service. Well, here's the S&P. This is last week, right before the Fed meeting. So we were breaking out to fresh June highs. The market's all excited. People are waiting for some sort of Fed reaction to come, and bam, they hit us, and the market starts to sell off. And then we proceed to break down below the 50-day moving averages for the third time. On a side note, I wrote this in my swing trader column. When you see a support or resistance level challenged 3 times, usually the third time it's going to fail or it's going to break. That goes for usually typical resistance as well. You could see that this was resistance 1 here, 2 here, popped above there, then failed. Those 50-day moving averages held the first test, held the second test, failed the third test. It's just a typical, here it is too, somewhere around the 20-day moving average. You could argue that this held once, held twice, broke a third time. It's just something that repeats itself over and over and over again. Just be aware of that. Anyway, so the market was obviously started breaking down last week really hard, and I was already short some stocks, but I was looking for something that hadn't broken down yet, and VMware was one of these stocks that I had gone back and I recognized as an inside day pattern that I'd looked at, and it had this inside day pattern, and you could see it was attempting to break out last week. And this narrow range here was particularly attractive to me. If it could get above 72, I figured it could run somewhere to 73 to the 50-day moving averages, maybe retrace some of these losses. However, since the market was breaking down, I was looking more at this failure pattern here that was developing right around the $70.69 area. And on this day here, when the market gapped down, this was a stock that I basically just dove into a short, recommended on the site around the low 69s. It turned out to be a great day trade for about almost $2, 2.5 points. And then we just turned it into a swing, which resulted in about a $4 gain down to the 65 level. And we're still holding a little bit of it short, because I tend to trail my a small balance when positions work in my favor. One of my strategies, I always want to. I like to turn my day trades into swing trades. So I usually will go into a day trade trading, some sort of size, and I'll take profits as it starts to work in my favor, usually of $1 or $1.50, $2. And if it closes strong near the day's high or day's low, I'm going to want to carry some of that overnight, assuming that the momentum is going to carry over, as it did here. You can see in this example of VMware. So we carried it over, and then the rest is just gravy from there. I just start locking in profits as it trades, another $1, another $2 in my favor, and then usually by the time I take a third partial profit or 2 partial profits in a stock, I have a very small position left, and I'm putting all those profits to work in new opportunities, and I'm just trailing a very small position left, usually with a stop around break even. Right now I have a trailing stop right around 69 area, or at the very least I'm going to have an alert set for a particular stock depending on how active it is. Another example of a failed breakout that I came across back in May that I recall was this was actually a failed Doji pattern. So this was kind of showed up on the Doji radar on May 15th. And again, Dojis are kind of like these when the open and close is very similar to each other on like this day here that we could see on May 10th. The reason it didn't show up on a scan is because I also have a requirement that it also be a narrow range, one of the more narrow range in the most recent days. So this one actually showed up on May 15th, and this was a decent short to take if you were day trading, as it took out the low. But the key for me was actually I didn't take this trade, but I was looking back at it, and the key here would be what happens after this doji trade. And if this gets reversed, if the stock can trade back above this 100 area, 101 area, it's a pretty decent long candidate, especially since it's got this look to it that has almost like this bullish flag developing, especially coming off this big run up here. So this doji pattern, you want to look for this next breakout, next leg higher, which kicked in actually on May 20th, and the stock was good for about a $2 gain before it got crushed soon after. And then this brings into another pattern too on the page. FedEx on this big run-up day here, 1, 2, 3, 4. This is going to show up as what I define as a power up day or a power down day. And it's going to be 3 or more days of the stock running higher or 3 or more days of stock running lower. It's not just a scan of, it's got to be significant. They're based upon, you want to see higher highs, lower lows, significant close above the previous day's highs, wider range, in play. Volume should be a factor as well in the scan. So you're not just going to get like a typical, like over here, in late April, you're not just going to consider this a power down day because it had 3 or 4 consecutive closes. I actually want to see these significant size moves. In my mind, these power moves mean that some institution, some mutual fund, some major player is taking a huge position in this stock. And after it settles down for a day or 2, I'm going to look for some sort of resumption of the trend, for some sort of support level to come back into play, where I could try to find some sort of trading opportunity. Another good example of a power down was May 1st. So again, May 1st, I went back to that, taking this into context. The market had run up real strong into late April, pulled back one day, and Lennar showed up actually on May 1st as a power down day, where the volume was increasing above average, the closes were significantly lower. It also showed up as, I believe, as a pullback candidate, and you could see that if you just do basic technical analysis, you're going to see that this was a huge gap that was actually coming into play as a support area, right around 40. You also had a combination of the 50-day moving averages and the 20-day moving averages just lining up there. So you knew this $40 support area was in effect with a power down, with a pullback long candidate. And the market itself was fairly strong, and then the stock just completely turned around, broke out above 41, and managed to make a nice run to 43, 43.50, 44 over the course of the next few days. EMN I also have as a May 1st power down. As you can see here, this is probably earnings is my guess, or somewhere around here. The stock sold off really hard. It was down off this high almost 13% as it broke down below the 65, 66 support area. So power down plays, I'm always I wouldn't say you just can go in the next day and start fading them, but if there's some sort of extension in these names, maybe you can start fading them for, like, say, for example, a bounce or a short. But for the most part, it's usually telling you that there's some sort of major accumulation or distribution pattern going on in these names. In this case, the stock showed up as the wide range breakdown. It showed up, I believe, as an oversold candidate too. But it was also a power down, and the market itself turned around, breaking out to new highs, and I believe that I jumped into this one as a long candidate, somewhere around 65. If not, this might have been the same stock that Level Watch took this as a long. Another good example of a power up move that you can fade. Or actually, I want to go to Goldman Sachs is the one. Goldman Sachs actually showed up as a power-up candidate a couple times here during the month of May. First one here was right here, these 3 days, 1, 2, 3. I can label them just to make sure you clear. So I can just go 1. This was day 1, day 2, and day 3. Again, power up days, high volume days, usually associated with some sort of breakout or some sort of like overbought condition. And again, they represent accumulation. These are stocks that after this 3-day move, I want to look at a pause, see how they react on the pause. If they correct really hard, that's going to kind of be a warning sign. If they extend higher, you could probably take them as a short, to some degree. And if they just kind of settle in here with the Doji pattern, that's just a rest, and you want to start looking at these stocks as, maybe potential continuation of a trend. So not only did this show up as a power up on these 3 days, it actually showed up as a power up on these 3 days, with day 3 being right here. And you can see that this was almost extended to the upside here. At this case, had a big reversal day, and then gapped down the next day. But since it was power up, it's telling you accumulation. You had a large accumulation pattern here, another large accumulation pattern here. This is like the first significant pullback to moving averages within the context of its uptrend, within context of its breakout pattern. You could have definitely have been a buyer on signs of strength, 155, 156, 157, and as it started to resume above 158, 160, you could have easily jumped into that for a little bit more gains. Let's see. Last week we also had on May 22nd. We had this huge reversal day in the market. So obviously, everyone's been waiting for this May summer correction to kick in, sell in May, go away, and it just wasn't happening at all. But once the Fed started talking, everyone started becoming a little bit more, actually a lot more bearish, I should say, and you had this massive reversal day. So in my mind, I'm looking at the TA page scans, looking for any sort of pullback short candidates or overbought names that I should be looking to potentially short, maybe some wide range breakdowns that are starting early, showing relative weakness that I want to start shorting. And the pickings were fairly slim when the mark this day, and the only one that was really up there was Under Armour as an overbought candidate. And for this following day, so you can see the stock had a really strong run up in May, and then it turned around, and it was definitely a viable shorting opportunity here into the latter half of May, and it's been correcting ever since. Let's see. I'll go back to that TA page scan so we just see what I've covered so far. Again, inside weeks are really great patterns, especially on failures. I'll even say the Doji patterns as well are excellent patterns to pay attention to. If you can also get a Doji pattern, say with something like, I'll go back to Goldman. This was also a Doji. This was a short pullback candidate back in mid-April, and it also, I believe, it showed up as a Doji scan. This was one of the, the open and the close are fairly close together. The stock had rallied 3 days in a row, found resistance along the 50-day moving average, which is this green line, in context of the bigger picture downtrend that was in play. The market itself, around April 15th, you can go back there, was kind of looking a little overbought. Had a nice breakout to all-time highs. Everyone's bullish, but there was definitely this feeling of a correction or overboughtness going on in the market. So this is where Goldman was just an excellent shorting opportunity around this 150 area. Another one would have been Cognizant, mid-April, right before this massive breakdown. It showed up on the pullback short candidates. You had a nice tight Doji pattern right here the following day. So even if you missed an entry because you felt like it was just gap down, and you're like, oh, it's just too far from the high, the risk reward ratio isn't good for me. It did have a Doji pattern that's set up here, and it failed. And that failure of a Doji pattern combined, knowing that this is a pullback short setup, was something that could have been taken, and it actually was an excellent shorting opportunity if you caught that. I think that's another point I wanted to point out too was, on a given day, you're going to see a number of results here. And I do go through all of these, but I go through all of them quick. It takes me literally 10 minutes, just to go zipping through them. Sometimes I'll look through some stocks, and if I don't even know the name, I'm not even going to bother looking at it. Like right now, I don't know what ACT is, ACT, Amrin, AMRN. I'm not really concerned about that. I'm probably not going to trade it. I really just kind of want to, like I said, look at the ones that are jumping out at me, particularly from the liquid momentum, emerging growth focus lists. Those are the ones that I know have enough liquidity. Those are the names I want to be really tracking. I also want to pay close attention to anytime I see a particular sector or a whole bunch of names in a sector showing up. It's not shown here, but you can almost trust me that the wide range breakdowns and oversold names have seen a ton of gold and coal stocks over the last few weeks. And taken in context of those things being in massive bear cycles, those are still viable shorting opportunities. And if you're picking them up as a oversold candidate, you have to definitely recognize that you're going counter trend, and you need to adjust your position accordingly. But for the most part, I definitely want to always be looking at, I see the diamonds are up here. I see IWO, QLD. There's certain contra ETFs that are, I think a couple days ago, what was that, the breakdown? Let's say last Friday. Here you can see the wide range breakdowns going into last Friday was 173 stocks, which had a filter for the heaviest volume. But you had gold and just a number of stocks, housing, XHB. I'm always trying to find those ETFs. That's going to give you a solid general sense of which sectors are really getting completely destroyed. You can also see on the wide range breakouts, and this is another reason why I think we're in more of a corrective phase, is these are all, for the most part, contra ETFs. These are the S&P Diamonds contra ETFs, the NASDAQ contra ETFs, small cap Russell contra ETFs. When you start seeing things like that, you want to really not be a buyer of the market. These are just things that you could just look at. You could see overbought. It's the FAS. It's the financial ETF. I wouldn't say just because it's overbought, it's time to start shorting it. But it's probably, you look at the chart and you tell yourself it's breaking out. You got the TBT overbought. But that's the bond market. It's just certain things you can just look at, and you can get an overall feel for what stocks are getting hit really hard. Here's GDX, GG, GLD. I mean, gold. It's just things that you either want to avoid or focus more on the short side. And this is kind of the way I interpret and go towards the market each day. Let's see. So I'll go back to this one. That pretty much, I think I covered most of them. Inside week, again, this is really a very similar pattern to inside day, and it tends to work very well, with failed movements. RAX has been one that's been showing up a lot lately, so I'm just going to highlight it quick. This is a weekly chart now of RAX, and it showed up about 2 weeks ago as an inside bar. And you play it the same way as you would a daily chart. If it breaks out above the high, after it's been sold off significantly, it's been sold off for a couple of weeks now. That high was actually the first higher weekly high in 1, 2, 3, 4, 5, almost 6, 7 weeks. That's a pretty significant move to maybe consider buying stock above the 36.50 level, and seeing what you can get out of it for a bounce. And vice versa, it actually showed up as an inside week at the end of May, and it broke down and to new fresh lows, which is a shorting opportunity. It also was an inside week in mid-May, and it was another shorting opportunity here. I don't take all these trades, but what I definitely do, and I want to focus on, is when the colors change. So, in other words, I always want to pay attention to, here's a down week, and then the week goes positive above the previous week's inside bar high. That's a trade that I want to pay attention to. Over here we have an up week, and then the market went down below the previous up week's low. This is a good shorting opportunity. And it also went below this inside up week low right there. That's another good one. Here's an inside week. It was an up week. I want to be short below it. again, this is the false breakout. I'm trying to, you know, basically take advantage of people who are on the wrong side of the trade, or are on the wrong side of the overall trend. And inside bars and dojis, and whether it be a weekly basis or a daily basis, they really do present some of the stronger swing trading opportunities, particularly on the inside weeks. I've actually, since I've added inside weeks, I've had a number of people write to me on feedback saying how it's probably one of their favorite setups to trade, and they definitely spend. It's only updated once a week, as is the bang for your buck scans, and it's been the favorite of a lot of people recently, who particularly those who swing trade or trade options. I think that pretty much covers it. I have a little quick last PowerPoint here that I wanted to cover. Tips and tricks. Just make sure I covered some of this. Yeah, it's another thing. So some days you're going to see where I write in none because the computer didn't pick up anything, bullish or bearish. Don't ignore that, because there are definitely days where if the market gets really strong and pushes in one direction, it's going to be an extreme. So, for example, if you see there's no pullback longs, no oversold candidates, no wide range breakdowns occurring, you have none, none, none on all these scans that should be normally bullish, it's going to tell you that the market could be overextended to the upside, and vice versa. So just kind of take that into, I wouldn't, don't start shorting the market heavily the next day, but just take it into context of where the market is and what type of setups are developing. So again, it comes to that contra type of thinking of, just because it says nothing doesn't mean there's actually nothing. Nothing is something. Stocks that appear on both overbought and wide range breakouts, do not fade these. If you look at the charts, that's usually when they show up on the overbought and the wide range breakouts. Those are strong breakouts on the chart, and if you fade those, you better know what you're doing, because they're more prone to be bought on the first sign of weakness, and they're usually going to see some sort of follow through higher over the next day or two. And the same goes for the oversold and wide range breakdowns. That's it. Just don't be looking to buy those so quickly. They do tend to go another day, or pause and then go another 2 days. Power ups, power downs, they reflect strong momentum, accumulation, distribution. A 1-day pullback or an inside day usually sets up a nice opportunity to go with the trend. If it gaps up, and extends for a 4th day, those are usually pretty good for some sort of fading opportunities. I wanted to show an example real quick because I forgot to cover it. I believe it was, here was Google back in early March. So you can see Google had 1, 2, gapped up 3. So I had this massive run up from about below 800 to about 840. Showed up on the power up scans, and the next day it opened slightly higher and reversed. So that would have been one of these opportunities where you could have considered actually shorting it for a nice day trade or a swing trade. Another example was actually Bristol Myers on, let's see, where was that? Well, I believe this was the day right here, Bristol Myers, this big run up here in late May. Had a strong multi-day run up, and then wound up for an inside day. But this just goes to show you, too, that this is a strong accumulation pattern. 1-day pullback, it did have this massive $3 range here. So the next day was a little wide, but then it started developing into an inside day pattern, and the momentum just started to continue higher. And I wanted to show an example of a fade that I had. I believe it might have been, this could have been Colgate. So again, 1, 2, 3 days up, and then start correcting back. I'll have to go back and look at that one again. But that pretty much sums up, just, let's see, gap extension. Inside days and doji days, they represent a pause, and they're very prone to false moves, which can be very, very profitable. Same for inside weeks. And, the bottom line with all this stuff is like you're coming up with a focus list, and you're not going to be able to catch all of these moves. But if you can look at a chart and just come up with maybe 5, 10 stocks based upon the overall context and your feeling of the market, and just watch them or set an alert for them on your charting software, or place a stop order to get into a small position at a certain level. I mean, as long as you have some sort of plan and then you execute that plan, that's going to save you a massive headache of going into the market each day and having no plan and just not knowing what to do and not knowing whether to be long or short. I'm going to go to Q&A in 1 second, but one of my a good trade that I had this week, actually there were a ton to pick up on the long side. Anybody that was following my trading calls on the Briefing Trader service knew that on Monday and Monday and Friday I was throwing out a whole list of bounce stocks on my radar, and these were basically a bunch of oversold names, based upon my scans that I felt were going to be, some really, really nice bounce opportunities. And one of the ones that I was looking at yesterday was this railroad stock, Union Pacific, and you could see that it had gap down. It was breaking down. It was on a wide range breakdown candidate. It was around the 50 days, I believe. It was also considered to be a pullback candidate because the 50-day moving averages were still, rising. The shorter-term moving averages were still above the 50-period moving average. So there was this intermediate, bullish bias going on. But it was also an oversold candidate. And so this was one stock that I had on my radar coming in yesterday as a potential long candidate, especially if it started reversing, going back above 151. And what I looked for intraday this was yesterday, June 25th. So the stock opened higher, came in around 151, the prior day's high, and once it started trading down around this level, 151, 150, 151 area, I basically put out a post that said, if it breaks above the opening range high, as well as yesterday's high over 151, I want to get long. I want to get long this stock above 151, and I'm expecting at least a close of the prior day's gap to 152.50, if not, a swing trade up to 154.50 somewhere. We got filled maybe about 10 minutes later, 151. Stock pulled back in a little bit. I definitely was looking much bigger picture for this, so I wasn't looking for any sort of scalp or day trade in this one. So the fact that it pulled back in didn't bother me. I think I had my stop somewhere about a $2 stop around 149 level based upon these prior lows. So I was really just willing to give it the benefit of the doubt given the extreme oversold conditions. And then it just started slowly working well in our favor. And by midday, we were actually taking a partial profit of about $1.50. And it consolidated midday yesterday, and then it rallied really strong into the close, almost near 154 for a $3 gain. Today we come in, it gaps up to 156, closes all the gaps. We take another partial profit for a $5 profit, and now we're just holding the balance for a nice swing. And that's typically my style that I'm going to trade. I want to look at these stocks. If you're scalping, that's great. You can always look at these TA page scans, but for the most part, my style is to look for a good day trade, and as long as it finishes strong in my favor, I'm going to try to carry a partial overnight for the swing. And that pretty much sums everything up. It's been 45 minutes, so let's go to Q&As as quick as I can. Please review where the scans are located. Sure, no problem. So the scans, if you're a Briefing Trader subscriber, it's under the Investing and Trading dropdown. It's under Technical Analysis. It's under TA page scans. And you just click on that. And again, I just there's other videos here, by the way, that I've done in the past. Here's some examples. You can actually go through, and I haven't updated these in probably about a year or so, but I should probably look into that. But this is just a better, cleaner examples of some things you can look at if you didn't really grasp what I was talking about. There's also a webinar that I did on these probably about 6 months or a year ago, and you can just click there onto that link, and you'll see me go into a little bit more depth and more examples of these patterns. I'm not going to touch any specific stocks because that's not what this webinar is about. So I'm looking more about focusing on the TA scans. When I focus on those specific stocks, this goes on way longer than I want it to. This webinar is recorded, so don't worry about if you logged out. So it will be emailed out to everybody, and it will be posted in a link somewhere on this page. You can always go back and look at it. And that's pretty much it. So it looks like there's really no questions. I guess I covered it. If you are interested in taking a free trial of our Briefing Trader service, you can contact our sales department at sales@briefing.com. Ask them to set you up for a free trial. Or you can call 312-670-4463 and ask for the sales department there. And like I said, the whole key is to kind of use these scans as a starting point each day. If some traders just trade the same 4 or 5 stocks all the time, which is totally fine by me. My recommendation is if you're going to do that, I would definitely take a look at these bang for your buck names because these are the ones that are going to move significantly. If you know your charts, and you're looking for just scalping in and out, I would definitely be focused on stocks like First Solar and Tesla and WLT. They're going to move points. They're not going to move necessarily percentages, but they're definitely going to move points. So you don't even have to take a large size in them. If you don't, you can just take a few. You can take an odd lot and still make like $100, $200. Just in one day, based upon the volatility that's behind some of these names. They're also excellent if you know how to trade options. These are also excellent candidates based upon their high implied volatility. Let's see. Any more questions before we close it up? That's pretty much it. If you have any more questions, you're more than happy to shoot them to me at tapagescans@briefing.com. I prefer you send them there. That way I know, it tells me that you were looking at the page. I'm also very open to constructive feedback. If there's a scan that you think is working for you over the last couple weeks that you use often, I would love to hear about the way it's working for you or how you trade it, particularly if you have an idea for a new scan, something that you can't find somewhere else, or you want me to back test it. I'll look into it. It takes a few weeks for me to actually look and find examples and go through it, but if I think it's something that's going to be profitable for subscribers, then by all means I'm definitely going to add it to the scan list. Let's see. I do have some questions are rolling in here real quick. The presentation's over, so you're more than welcome to leave. Let's see. I do. All right. So my personal trading on the site under Blue Chip Trader, I do tend to short ETFs and sector ETFs more so than I do short individual stocks. If I'm going to short an individual stock, it's usually going to be for a day trade, and I'm only going to hold on to it unless it works significantly in my favor. Otherwise, I'm going to really kind of just be focused on ETFs, particularly as a hedge. UPRO is a weighted SPY, and this is something that I've been swinging as a short position pretty much since the last the May Fed meeting. We got short somewhere, I believe around 68, 69, if I recall. And we've been, locking in profits at the 50-day moving average. We added back to some of the short. I don't think we added here, but I want to say we added somewhere after the last Fed meeting, around 67, 66 on that breakdown. Just locking in profits where we can as a swing short, but that's also going against, as a slight hedge to names that I've been picking up on weakness. I know BlackRock was on the power down list about 3 or 4 days ago. I believe it showed up on the Oversold list as well as the breakdowns too a week ago. But I saw this huge support level right here around 22 240, 245, and picked some of it up as the market started to recover, and we caught like a nice $10, $12 gain in that sense. But yeah, that's typically my type of trading. I tend to hedge myself with a short in some sort of index or IWMs or something else, and I keep the stocks mostly for the long side. My theory behind that too is that someone's always going to find value in a stock, and there was just been way too many times where I've been short in an individual name, and some analyst comes out and upgrades it, and I hate that, and the stock just gaps up and squeezes me out of what looked like a beautiful short position. Because like I said, as price goes lower, there's always somebody that's going to find value in it. I find it to be a little easier to do in sector ETFs and index ETFs. The only time I'm actually going to go long like an ETF is if an entire sector is getting completely destroyed. Good example would be IBB, the biotechs. I picked this up twice here in June. Once was right here on this reversal bar back above the 50-day moving averages in early June for a nice bounce of about 10 points, and we picked this one up 167 on Monday, and we've had a nice 6-point gain on this one as it came back to close this gap. So that's really the only, and there were just way too many biotechs that were oversold at that point, and I like the support levels that were in play. That should wrap up almost everything. I'm going to hang out for about 30 more seconds. And again, as I just want to reiterate that, use the TA page as your starting point in conjunction with everything else. There's a ton of other analysts on our website that put out other columns. Read their columns. Technical Take shows all these the indices, major levels you should be paying attention to get a better sense of the broader context of where we lie. And I write a swing trader column, which I'm always going to giving an overview of my opinion of the market and different sectors. Page 1 is an excellent page to be focused on for day traders, as well as just getting abreast of what's going on with the economic data for that day. You always want to take in the bigger picture context first, and then look to see what names are setting up, so for trading opportunities. And with that note, I am going to end this webinar. So I appreciate everyone attending. Hopefully you learned something and can apply it going forward. Have a good night.